Hey everyone, John Halley speaking, and this is a quick video because I've been getting some questions about the Bombay Stock Exchange. And if you want to learn more about the Bombay Stock Exchange, you can just go to BSE India, BSEINDIA.com, and you can see here it's got a lot of good information about the Bombay Stock Exchange. Okay, so if you want to go there, go check it out, and it's got heaps and heaps of information here. But while we're on this video, I want to give you a bit of a tip while we're trading here, okay? Because obviously when you're doing courses and doing programs and stuff like that, you want to get the best out of it, okay? So what I'm going to do is I'm going to teach you a little tip to use in any type of trading, whether it's intraday, whether it's weekly, daily charts, etc., etc. Now here's a quick tip. If you're looking to stack the odds on your side even more, you can actually use just simple 2 moving averages. You can see on this chart here that I've got a 200 moving average and a 50 moving average, okay? Just simply tested period moving average, which actually work. And actually, look at this thing here. If we start to move up through here, if we start to get across through here, and the market's above this moving average, guess what you should be doing? You should be buying it, right? Wait for the pullback, buy into it, wait for the pullback, buy into it, and so on and so forth. But guess what happens? When the market breaks down, and we now get the cross back over, guess what you should be doing? You should be going short, right? Or selling into the market. Wait for the rally, sell into it. Wait for the rally, sell into it, and so on and so forth. Okay, so with using 2 simple moving averages, a longer term moving average and also a shorter term moving average, we can start to stack the odds on our side even more of having a profitable trade. Okay, so whenever you're doing courses, look for the things that start to stack the odds on your side even more. Okay, not just the technicals, but the actual fact things that you're looking for to actually stack the odds on the side. Because look at this. Once again, if we're above the moving averages, we should be going long because the trend's long, right? If we're below the moving averages, we should be just going short. We still should be going short here. Okay, so we definitely have the crossover here. Okay, and then we have the market coming down through here. Okay, so if you want to be doing anything, you want to be just trying to go short through all this time. Okay, and because the trend's down, the moving averages are pointing down, so the trend is down, so you want to be going short. And as we can see here, if we start to get the crossover and now the market's above the blue or the faster moving average is above the slow, well then you can start to use this to look to buy into it, okay? Buy into it, and buy into it, and so on and so forth, okay? You can see this is where the trend line comes into it now, okay? And then we've broken down to where we are now. So I wanted to give you that tip because if I squeeze it up, you can see here clearly that if we just use 2 moving averages, a slower one, sorry, this is the slower one through here. Okay, so this is the slow one through here. Doesn't have to be 200. I've got a 200 for the slow one, and this one here is a 50. But you can see if it's above it, there's a nice chance of going long. There's the probability of going up. But if we start to cross below it, so here's a cross here, okay, and here's also a cross here, and if we start to go below the moving averages, the probabilities is now for the downside. So look for short signals, and if the market's crossing above the moving averages, we've got a fast and a slow. Look for long signals. That way, because remember, we're all about probability, right? We're all about adding the probability to a profitable trade. So here's some things you can use to stack the odds on your side even more when you're looking to get into a trade.